Hi guys, welcome back. We're going to jump right into this. This is August 16th right now, 2025. GameStop is currently $23 aftermarket, 22.94 is where they ended on the week. But I want to talk about R&R ratio. And if you guys don't know what that means, it's a risk and reward ratio for GameStop. There's a lot of things here indicating wise. You look at MA, okay, your moving averages over the time frames. I use 50-day, 200-day, and 500-day moving averages. So I'm just going to give you an example of like what we're looking at, and let's take away MA for a second. Okay, so this is the stock over the last 16 months. You guys see it. We had this huge run up. Now you're going sideways, and it seems like we found the floor here. We found where you're really not going to go up. If I show you a trend line, I can show you a trend line like this. This is going to be from 1875 way down here, and straight across all the way to $23. But that's up, right? It's up and to the right, essentially just like a slow, gradual grind. It's about $5 though. $4 is from the bottom to where we are today. But the R&R ratio is basically, are you going to risk a dollar to fall down? If I put in X amount of dollars, can this actually come down below this trend line over the last 16 months? Or is there more reward, i.e., most of the trades above where the current stock price is? We know GameStop has offered shares. We know GameStop offered convertible notes and much higher conversions than what the price is today. That's neither here nor there. What's really going to show you is like over all the years, like I can take you to this weekly chart. You saw GameStop here, and if you were buying the stock way up here, like most of us were, we were all coming in $40 a share, $50 a share, and my average ended up being at the end of all of this was around $25. That was my average by the time we hit down at $10 a share. A lot of people said I was wrong. A lot of people said, you don't have any value there. Well, here's the thing. When it ricocheted off the floor was the bottom of the risk and reward. So if we go across horizontal, just right here, boom, that means there's no more risk at the bottom of this because that was the bottom. And how do we know? Well, we run across, and when we've shown you before, that's the top of the previous resistance. The where it touched, boom, came down, touched, boom, came down. So down here, plenty of reward, right? Plenty of reward because you're not buying at the top. I see a lot of stocks. If you go to the markets themselves, I guess we can go look at the SPY really quick. Look at the SPY. If I'm buying the SPY today, what's my risk versus reward? I'm literally going to buy the top of the market, which you always do, but you could always fall down on a good run, on a down round. You could fall down on some tariff news or some headlines, sensationalized, and or if there's going to be a change in the rates. But when you look at GameStop, an individual security, and you know that this is your bottom, your 995, so you'll never get there again after everyone's bought back in. We saw the OBV increase over this time frame, and that's the on-balance volume as far as people buying it on green days versus red days. You've seen institutional investors increased down here at the bottom, right at $22, $23, $24. Everyone's buying more shares. I believe the net was around 42 million more shares added by institutions over this last quarter. Huge amounts. It's 10% of the float just being bought out right at the bottom. And that's because there's nowhere to go. You're not going to go down on this stock. You're actually going to go up. And I'm going to show you, and I'm going to explain it all to you guys. And here's why. And I see us going up. Going to go touch back to this 35 time frame, and then we'll see if we can get out of that Dorito that we're in. We're stuck in this huge pennant, but we can bounce out of it. But I want to show you. So let's bring up the moving averages here, and this will give you a good reference. Okay, so green moving average here is the 50-day. The yellow, the gold right here is the 200-day, and the 500-day is this blue down here. Now we have used 500. I'll take away the purple here. We have used this 500 as our support. The previous run-ups and and as they bring it down, but all the while, as you see it come up all the way, you can't really gauge it too much. But as it settled down, that was now your support. So this is your risk versus reward line. Sound familiar? It should. As you go through, I'll even show you on a weekly chart. If you go through here, they use this line, this blue line, to say, you know what, if I'm buying below the blue line, then I'm in the good. If I'm buying above the blue line, well, then maybe I don't want to be here. But for a lot of us who just want as much as we can or accumulate shares, you don't always get so lucky and hit it rich, down at the bottom below it. When I'm going on the daily chart, look at this. It hits the bottom, a la Tony De Niro, where he buys in right there at the bottom. I got it right at the bottom. Boom, boom, boom. Right here. Got it right at the bottom. Well, guess what? Your reward is everything above it. Your risk, well, what are we going to fall down to? 21.37? That's where we're going to go, our 500-day moving average. There's no one out here who has an average down during this time frame. Over the last 500 days, we've had more institutions buy the stock than sell it. We know that. We showed that in the previous video. But from what I can see from GameStop right now, they're about to make a run because they have nowhere to go but up. And the R&R ratio tells you that, as if I were buying in at this bottom, what's my reward? All the way to the top of it, way up here where it's reached twice already. And or if I'm just a swing trader, day trader, well then guess what? I can go from 22 and I can come down $1 and get to 21, or I can go up $5 from $4 and get to 26, 27. Like, that's the truth of this current time and current window that we're in. So I'm excited for GameStop. I think that with all the new websites that they built, if you guys don't know, they invented, it's called powerpacks.gamestop.com. There's also new products that they're selling on their website online at gamestop.com. And then the sheet itself, they cleaned up the company. The coffers are looking great. They have $9 billion worth of cash and securities, and their market cap is at $10 billion. I could just tell you that if you minus out the debt and or the convertible notes, they're worth a lot of money. They're worth more than what you see on paper right here. So $22, $23, nope, that's not how I see it. The minute they deploy cash and they tell you what they're going to do with it, it increases the value of the company. It does, because they're only giving you 4% return on the cash because of the interest rates where they're at right now. But as interest rates do get lowered, maybe people come out of stocks and get back into, back in bonds at a great level. I guess people are going to want to renegotiate their bonds, and they can, and people will once the rates get lowered. But money will swing. Money will swing on this market if you understand the way macro trends work. But we don't know what the Fed's going to do. We're just sitting back waiting for the Fed to find out what they're going to say. They're going to Jackson Hole this weekend, or throughout the week. And maybe they come out and they tell you, here's what we're looking for. We're looking for one cut this year. I don't think they should cut in September, me personally. But, there's a lot of fear out there, uncertainty and doubt and despair, as they call it. People are pushing for this cut. People are pushing for a lot of things. I just put it that way. And I'll tell you this one last thing. While you guys watch markets get grossly overvalued, and you see these valuations via earnings and speculation, all of it's speculative at this point, because the valuations you see are 70 times book, 50 times book, i.e. PE ratios of 550 like Palantir. You're never going to make back that money. The current value of the company, you'll never make it back. But I will tell you, there's one company out here that's getting a fresh look. The forward PE ratio is going to be 34. They make tons of cash. They just run the business right. And I've been watching Power Packs. I've been watching everything they're doing. It's fun to be a part of this company. So R&R ratio right now, for every dollar you put into GameStop, you might lose 1, but you might gain 5. It's a 5-to-1 ratio. I think people like those odds. I really do. Enjoy your stay. Enjoy the channel. Marantz YouTube. I'll see you around. GameStop. Can't stop, won't stop. GameStop. I'll see you around, millionaires. Peace.